I mean, there's no doubt Trump's economy is shaking things up. I mean, we got Doge looking to cut costs. We got the stock market's going crazy, losing like 10% in a 3-day period of time. There's so many people sitting now saying, I have no clue what to do. All right, so here's how the wealthy are actually adjusting their playbook and how you can do it too. So first off, the principle you gotta understand is you invest for control, not just growth. We don't want to just throw our money into something hoping and gambling and praying that's gonna make money. And now literally trillions of dollars have been lost in just weeks' time. Literally days' time, we've lost trillions of dollars in the market. Was that money actually lost? No. It wasn't. It's been changing hands. Now, in some ways it has been lost for certain people, but other people have been making more money, like myself. I've been still making great money with what's going on right now. And just so you know, bonus here, invest in a thing that nobody wants to invest in. Invest in a thing that everybody says, that's a bad investment, don't do that. Which, by the way, the last few years, real estate investment has been getting kicked in the teeth. Maybe there's something there. Let's talk about that in a second. From a historical perspective, here's what I'm worried about with the stock market. Most people will look at what's called the Buffett Indicator. The Buffett Indicator takes the stock prices, like the S&P 500 or the Wilshire 5000, and compares it to the GDP, the gross domestic product. The gross domestic product is basically the health of the economy. What is it that we're actually producing and earning? Is the economy growing or shrinking based on that gross domestic product? Usually if it's over 3%, that's a good sign. If it's under, especially if it gets under 2%, that means it's contracting and we're probably seeing it grow less. If it's negative, that's a bad sign. Well, right now, compared to what the economy is growing, the stock market has been going off the scale. In fact, it's more than double the value of what it should be. So right now, the stock market could be the scariest place to be in. And just so you know, big money has already been moving away from it. That's why we've already seen it crash, right? We've seen it because people that are wealthy investors have already moved their money out of the market. They've already done it. If you're still in the market, you're late to the party already. Here's what most average people will do. Average people that are not investors, average people that don't make good money, they're gonna leave their money in the market. They're gonna listen to some crappy financial advisor say, just let it sit in there, set and forget it. You know, in fact, it's on sale right now. You should dollar cost average because nobody knows if it's gonna go up or down. So just keep putting more money in, but keep buying. Did you notice that financial advisors always tell you to put money in? It doesn't matter if it's going up. They say if it's going up, keep putting money in because it's going up. But if it's going down, keep buying because it's on sale. And by the way, just don't watch it daily. It's too stressful. Let me worry about it. And guess what they're doing with the money? Nothing. They don't do anything. They just let it sit there too. It's the blind leading the blind. So be very careful. They're going to tell you to stay in the market when you shouldn't. I'm not here to tell you to take your money out of the market, but maybe you should. And so what's my favorite investment right now, right? Because I like passive investments. I like investments that pay you. They're backed by real assets like real estate, and they don't have all the ups and downs you get. For example, in real estate investing, you don't see the real estate market tank in 3 days, right? You don't see a 10% drop in the market, in the real estate market in 3 days. That doesn't ever happen. Real estate's very slow moving. It's easier to get in and out. Now, I should qualify this. It's easier to deal with getting in and out because it moves slower. It doesn't mean it's easier to get in and out because stocks are actually easier to get in and out of, but most people don't act that quickly. With real estate, it gives you some time. There's some time to be able to get out of it. You have months, sometimes years, before you start to see an effect happen. And just so you know, if you look at all the recessions, for the past 6 recessions, only one of which did real estate prices drop. In the other recessions, it didn't do that. In fact, sometimes it even went up in value if it didn't just stay the same. So be aware that real estate actually can grow and be safe. My favorite investment right now, based on what's going on with interest rates and everything else, aside from keeping my money in cash, I am keeping a lot more money in cash right now. I'm keeping it in my life insurance, specifically whole life insurance. I know some people say, well, that's stupid. Why would you do that? Well, you might think it's stupid because you don't know how to use it, right? Because I use whole life insurance, I get very low cost. I minimize all those costs as much as I can so that my tax-free savings account inside grows right now at 6% with zero risk, tax-free, and is protected from lawsuits of creditors. So if one of you guys are like, you told me to get out of the market. No, I did not. But even if you try to sue me, guess what? That money is protected. You can't get to it anyways. And that can also work for you too if you want to protect your money from those people. I like to protect my money from taxes, and I like to protect it from lawsuits of creditors. So I have money there. I'm keeping my liquid cash there, and I'm building up more than just my emergency reserves in there because I know in recessions, it's the best time to act. Now, am I keeping all my money there and just letting it sit? No, I am still investing, but where I'm investing now is I'm lending my money. Lending in real estate has been great the last couple of years. Ever since the interest rates have gone sky high, lending my money has become better because now I can charge 10, 12, sometimes higher percent per year on the money I lend to real estate investors. And even better, I can even have claim on the property. Because if they don't pay me, I take over the property, and that property has to have equity for me even to lend to that. So I make sure that I'm protecting my investment. I'm acting like the bank. I'm actually investing. When I'm lending my money to people, I want to make sure I have some kind of claim on assets in case they stop paying me. There's even lending funds, by the way, lending funds that you can go into that has multiple things. Now, you may not be on one property, but you're among multiple real estate investments, multiple loans, so that you're spreading your risk among many properties. So even if one deal goes south, it's not all or nothing. You know that you're more safe. You don't have to deal with any hassles in case that real estate investor doesn't pay you back. Again, you got to make sure you do good due diligence, and that's something we help a lot of our clients do that are our VIP clients that work with us one-on-one in creating this customized game plan. If you want to learn more about passive investing and some of these other investments that are possible you could do beyond lending, check out this video right now.